Thank you very much, and good evening all, and welcome to our hearing. I'd like to call the meeting to order and acknowledge we are in Treaty 1 territory, the home and traditional lands of the Anishinaabe, Ojibwe, Inuit Cree, and Dakota peoples, and in the national homeland of the Red River Métis. Our drinking water comes from Shoal Lake 40 First Nation in Treaty 3 territory. Introducing the members of the panel this evening. Via Zoom, we have Carrie Linklater and Kira Penner. Myself, I'll be chairing. My name is Mike Colatrubio. Secretary to the board this evening is Twinkle Sharma, and from the assessment department, Matthew Barakis. To the Zoom participants of the hearing, please note you are placed in the waiting room until your property is called upon. When it is your turn, you will be admitted into the meeting. Kindly follow along the City of Winnipeg Border Revision YouTube channel for the hearing process. Once the host admits you into the hearing, please close or mute your YouTube player. You will then be permitted to speak with respect to your property. Once your hearing is concluded, you can leave the meeting. We'll be hearing application for revision of the assessment roll in accordance with the Municipal Assessment Act. The matters for which revision is requested have been described in each application, and we will limit discussions to those matters. The statements that are made at this hearing are sworn testimony, and anyone speaking to the matters must be sworn in. Be advised that comparisons of assessments of properties are not considered evidence of market value by the Board of Revision. The Board of Revision is appointed annually by council and is independent of it and the city administration. It makes its decisions on the basis of evidence provided at this hearing and issues a written order that will be mailed to all parties as soon as possible. Please note the board's decision with respect to an application may be appealed to the Manitoba Municipal Board if matter pertains to assessed value or classification, or to Court of King's Bench if matter pertains to the application of exemptions from taxation. Should you wish to appeal, information on how to do so will be included with the board's order. With respect to the hearing process, I will confirm the points of appeal with your property to be addressed with each applicant following the swearing in. We will then have the assessor's testimony followed by questions that the applicant may have, and then applicant's testimony followed by questions. Each side will have an opportunity to summarize if they wish. Once all evidence about the application has been brought forward, the applicant may leave. The process will repeat for each item on the docket today. The session will close after all applications have been heard, and the board will deliberate in private and make its decisions. You will receive the board's decision by registered mail as soon as possible. As information, all public hearings are live streamed, recorded, and will be part of the public record. We'll be hearing item number 5 on our docket today. Ms. Sharma, please affirm the assessor and the applicant's testimony.
Certainly. Mr. Assessor, please state your full name.
Matthew Barakis.
Do you affirm that the evidence you're about to provide at this hearing is the truth, the whole truth, and nothing but the truth?
Yes.
Thank you. Mr. Applicant, please state your full name.
Henry Dupont.
Do you affirm that the evidence you're about to provide at this hearing is the truth, the whole truth, and nothing but the truth?
Yes, I do.
Thank you.
All right, Mr. Barakis, please, let's have your submission for 435 Sargent Avenue.
All right. Thank you very much. So file number 24-2289, roll number 13053048000, 435 Sargent Avenue, Winnipeg Housing and Renewal Corporation property. The assessed value is $3,578,000 to 1984. We don't have any effective age on it. It's 36 suites, 18 outdoor parking spots. So I do want to make a verbal rec on this though, because if you follow me to page 3, then we can make your notes.
Okay,
So
let's have a look on page 3.
So basically I'm taking the net operating income of 174,848 And then I'm gonna use a 5.5 cap on it. I think 4.9 for this property. It is social housing. And it's not sufficiently small enough where there'd be investors that wouldn't be institutional. So the recommendation using the modeled NOI and a 5.5 cap for the 1984 building is 3,179,000. I'll pause there and then keep going.
So $3,179,000 even, correct?
That is correct. That's the rounded valuation.
Thank you very much. Mr. Dupont, are you interested in that number, sir?
No, I am not.
Fair enough. Mr. Baracus, please continue on in your brief, please.
Yep. So page 3 of the 36 total units. 10 one-bedroom, 21 two-bedroom, 5 three-bedroom. The average monthly rent is $928. And it's got a 54.5% expense ratio, modeled vacancy, and then the amended cap calculates 3,179,000, which is, if you are curious, divided by 36, that's 88,307 per unit. Down from the 99,000. So rent comparables are found on page 4, just through reviewing the applicant's submission. There's no disagreement on income, so I'm not going to belabor this point. And then I'll move on to page 5. And so this property does slightly fall into the centennial category of CMHC. However, knowing the city, there's a few renovated loft style apartments that would not be considered comparable to 435 Sargent, a social housing property. So I chose the neighboring zone Midland, which doesn't have those renovated loft style apartments, to do a rent analysis. That's the note there you see. Then I ran it through what I usually do in terms of year built, area, and unit count. And it calculated to show that we're only using about 79% of, if you take those 3 tables together and average them. If you just looked at the zone rent for Midland, we'd be 85%. The year and the building unit count notwithstanding. So it shows that we've got it pegged down to take into account that a social housing property without permits to show otherwise is typically more utilitarian in nature. And on the private market, they wouldn't be able to get super high rents for them. Then the source tables are found on page 7, and then the map here on page 8, even though I don't know how much good that's going to do. I use zone 3 instead of zone 2. Cap rate chart on page 9, which I know from the faces around the table today, we've all seen very much so in the past few months. So I use 5.5, take into account the age, the fact that it's more utilitarian physically. There's no record of permits or anything for renovations. I don't have pictures of the inside, but I'm assuming it's pretty basic in there. Second cap rate chart is found on page 10. UNIAC excerpts are found on page 11. And then the exterior photos are found on page 12. So again, 3,179,000 is my recommendation using a 5.5 cap. That's my presentation. Thank you.
Thank you, Mr. Baracus. Mr. Dupont, do you have questions of the assessor at this time, sir?
Yes, your expenses, that's a model driven. You did not do site specific.
That is correct.
Have you looked at site specific in this instance for the board?
Well, because it's being operated on a not-for-profit basis, I typically don't go to the site specifics. I just use the model expenses. We've got this pegged down in our model to, I believe it's poor, to take into account the fact that its condition isn't one that's been renovated. So modeled expenses, yes, just to clarify.
Okay, on page 5, when you go to the CMHC statistics. Now, on Midland, you have highlighted WHRC, and then you have 385 Carlton, MHRC. So why is the 385 Carlton there?
Sorry, where is this? Oh, that. Oh, I just forgot to change the title of the address. That's just a typo. It's and it should not be, it should be WHRC, not MHRC, Matt, or yeah. There's
right,
no
okay.
okay.
There's 2 typos on that page, Mr. Baracus. Page 5, correct?
Yeah, so it's all like it should say 435 Sergeant and Winnipeg Housing Renewal Company on where it says the column that says address, but if you look at the unit type and the year and the rents I selected, it all lines up. I just forgot to change the address in my Excel spreadsheet for those 2 tables, but the overall results are the same and they pertain to 435 Sergeant.
The information is correct.
Yeah, and I included the source tables to verify if there's any errors that it would be shown.
Okay, thank you.
Yeah, the suite mix is exactly the same as what it's supposed to be. So I tend to agree that it is accurate except for the address and the owner.
Very well.
So in the end, you arrive at a rent. The model rent 400,000 versus 506 for CMHC. The calculations 79%. So where'd you get the 79%?
Well, basically, I just divided the 400,000 into the 506 to 96, and that showed that the model rent versus I guess the average of the 3 table figures, when you multiply it by 36, you multiply it by 12, you get 506. So we're at about 80%. And then if you look at the zone itself, which is the lowest rent, the CMHC zone, it came out to 85%. So we're still a good amount lower.
So these CMHC tables are not used to establish a rent; they're just used to check on what you had per model.
Yeah, it's like secondary support, because in this instance, like with not-for-profits, we don't consider the actuals. So I go a bit deeper in terms of trying to figure out where we're at compared to the market.
So we did together 385 Carlton and other ones in Carlton, and your rents and other properties that we had, MHRC, tend to be at 75% of CMHC rents. So it's 79 or 85% on the high side compared to others that we've done so far.
Well, I mean, we've seen some that are 10% lower. We've seen some that are 15. The point is that we're not, like, we are a bit lower. It just, I don't know what to tell you. Like, it's not kind of like whatever the lowest rent is, that ought to be the percentage that's applied. This is just showing how the model rent compares to the CMHC tables.
Right. So yeah, I was just wondering why somewhere at 75 or even as low as 72. And then here we got the 80 to 85. It seems to be on the high side.
Well, it depends on also, I guess, what rent the model gives it, right? So we're low. Some are at 90. 20% off is a good amount, I'd say. And it's an 84, so there's, I mean, there are older. If we're looking at just the zone itself, I mean, there's gonna be older buildings than 84, some are gonna be renovated, some are gonna be worse condition, better condition, so 50% lower than CMHC zone rent, I think, checks out.
That's all questions I have.
Thank you very much, Mr. Dupont. Ms. Penner, do you have questions of the assessor?
No questions for me, thank you.
Thank you very much. And Ms. Linkletter, do you have questions for the assessor at this point?
Yes, just a couple. Thank you, Mr. Chair. Good evening, Mr. Barakas. I'm just wondering, are you able to speak to the condition of the building at all?
No, I looked all over for pictures. Looking from the outside, like it doesn't look like it's been renovated or anything. It doesn't look bad. It doesn't look great. It just looks like it's an 84 that hasn't had the exterior done. That's as far as I can tell. And we don't have an effective age on it. And I haven't inspected it, so.
No. Do you have any notes on when it was last inspected?
I do not, and I couldn't find any permits for it either, so I'm kind of lacking information,
Okay.
to be honest.
All right. So I guess I'm just wondering, your expenses were all model driven then, correct? I think you
Right.
did that.
Yes, yeah.
Okay. So did you consider perhaps changing your expenses in terms of just because you didn't have any information on the condition of the building and it is Winnipeg housing?
No, I mean, like with an absence of information, I wouldn't have anything to stand on to make it go, to take a look for it to go up or down. We have it pegged to core in our model, so that elevates the expenses. Yeah, 54% for a 1984 is higher than what we typically see on the market. But these social housing properties tend to be, unless renovated, in a condition that perhaps necessitates a bit higher expenditure, hence the higher expense rate.
Is the model taking into consideration that this is a Winnipeg housing property?
No, because what it is the same reason why we don't use the rents. If it's being purchased on a for-profit basis,
Right.
part of the highest and best use is maximum financial return. So, like whoever is purchasing it isn't going to be treating it like a social housing. So they're not going to look at the actuals in that way.
Right. I just wanted clarification. Thank you. And just in regards to your cap rate, you're on your recommendation,
Yeah.
the 5.5.
Mhm.
Sorry, and if you stated it, I just didn't hear it. How did you come up with that cap rate?
Oh, yeah. I mean, so for this building, and even if you followed me to my cap rate table on page 9, there's actually a couple of properties on Sargent, and they have lower cap rates. Well, why did I make a change? Well, if you look at their sale prices, you can see that they're 8 suites, 11 suites. They're smaller, so they're more accessible to the non-institutional investor. Hence, there'd be more competition. Hence, there'd be a higher sale price. Hence, there'd be a lower cap. That's typically what we see. In this range, in my opinion, you get into like over 3 million for a 36 unit building. Like it's probably going to be an institutional person with the capital to get in there. And when I'm looking at, sorry, I lost my chart. Scrolling through, where are you? If you're looking at, say, like Maryland, that's 32 suites. It's got a 559. And other buildings of this vintage of like a 1980, that's typically where we're at is 5.5. And my experience just working here, so that's
Yeah.
my.
Okay, thank you. And just to be clear, the property on Maryland that you referenced is not Winnipeg Housing, correct?
That's correct.
All right. Thank you, Mr. Barakas. That's all my questions.
Thank you very much, and I don't believe I have any further questions. I believe they've been asked and answered at this point. So, Mr. Dupont, I come to you and ask for your submission at this point, please.
Can I redirect?
Of course you can, Mr. Dupont.
So your cap rate 5.5, are you giving in any cap rate premium for the fact that it's social housing?
I'm not.
Okay, thank you.
Thank you very much. Go ahead, Mr. Dupont.
Okay. So the first page, you look at the photo to mid-rise, and have a few photos show that there's no air conditioning in the windows, there's no air conditioning in the walls, and I'll get to that a bit later. Also, we got the aerial photo on page 7, and then we have the map on page 8. So the area is near Cumberland. So it's Sargent in that particular area, near Cumberland and Balmorals in the poorer area. So the location is not that great. It's near the central park that you have there. Just on the bottom of the photo. And then we have the map, the Google map from page 9, it gives you more of an idea as to where it is. So it's more like the Midland area rather than the downtown area. So then we'll go to the appendix, page 23. So Winnipeg Housing is very good at filling out the questionnaires and giving data each and every time. And here I have highlighted under in-suite appliances, fridge and stove is shown and dishwasher is not. Siphon, the caretaker. And she said she confirmed there is no dishwasher in the place, and she confirmed there was no air conditioning, because also above there or under air conditioning it's left blank. I don't see any on the photos, but then I confirmed with the caretaker, and I asked her whether these fridge and stove were white appliances or stainless steel, and she said they're white. I didn't expect them to be stainless steel, which is more modern. And she says we buy as cheap as possible, basically because it's they get lower rents, then they don't have the cash flow for the repair maintenance and or to renovate or whatever to take care of the property. So we have the financial statements, page 24. They give very detailed information, and all the notes in red or green are from us. Altus, we put that in our spreadsheet for repair maintenance. We have the same thing for all years. Page 26 is the 2022 description, March 2022, and the other one was March 2023. Anyways, it confirms again no air conditioning and no dishwasher or wash and dryer in the suites. There's a little bit to the right. It says there's washers and dryers. There's 4 on each floor, not on each floor, on 4 floors. So I think we can just leave the appendix now. So page 15. So the cap rate that we use is 5 3/4. Property is built in 1984. It's very plain from the exterior, as you can see. That is social housing. There's no air conditioning. I didn't put it here, but there's no dishwasher. It has some balconies, and the parking is only 50%. and it's a poor location near the downtown Central Park. So it has a few incurable deficiencies, incurable obsolescence. That should be captured in the cap rate. So 1984, our cap rate for that age group would be 5.5. You can see above. So we're giving it a 0.25% premium for the fact of these factors that it has. So the next page is the spreadsheet. Now line 13, you'll see they're getting like 196,000, and we're giving it the assessor's rent 383. I was thinking of challenging the rents because I thought they were a bit high, but it's difficult to challenge and etc. So I accepted the assessor's rents. If it went a bit further, I think I would check more closely and spend more time on the rents. But for now, we're accepting the rents. The expenses have two lines in blue. So the water line 21, it was 35. I went 5 years. So I went back 5 years. Normally we have only 2 years because it was erratic. So the water was 35, 31,000, 28, 26, and then dropped to 12. And so I was wondering why it went to 12. And if you look further right, 2023 went up to 93,000. We should bring 2023 in this, but it gives us an idea. This is not the trend downward. They probably have only 3 quarters in there instead of 4 quarters, etc. So I stabilized at the 26,000 at the 2022 level because all the previous years were 26,000 or higher. 2022, the year ending March 2023 is abnormal. Wages and benefits caretaking, same thing. There were 19 to 23,000, 17,000, all of a sudden it dropped to 9. And then I peaked to 2023 as 15.7. So I stabilized the 3-year average that instance. And everything else is done pretty much normal stabilization. So you'll see that management's always 5%. Insurance and utilities are usually the most current years, and there's a few items we'll go with the average, and that's what we've done. We did the average for waste and snow, actual taxes. And then the only other thing that we need to do some analysis is the repair maintenance, and that's on the next page. So the next page, because the statements were so well done and so well detailed, we're able to get the data for each of these items. You can see the flooring. They've only spent 947 per suite per year. Oh, for the whole year, which is 26 per suite versus a maximum we allow 500. So they're not spending very much on flooring. Appliances comes to $59 instead of the maximum $225. So they're on the low end. Painting, they're about half of normal. Nevertheless, I stabilized at the actual, so they have some low items. So the decorative part is kind of low. Now the rest are spending money on their plumbing and HVAC and elevators as necessary. We've excluded the high year for plumbing. We exclude it's in red. And for remaining RM, we're excluding the high year in 2022, 30-some thousand versus other years and 18 to 15, 19, etc. So when we stabilize, after stabilizing each individual item, we get 1687 per suite. Is the stabilized repair maintenance. The 5-year average is 1973. That's shown there. That's excluding the CapEx and excluding waste and snow. So we're lower than the 5-year average because we disallowed a couple of years. So believe that the repair maintenance is very well documented, and we have stabilized very conservative manner. So when we go to previous page, our expense ratio is 60% versus the assessment's 54%. So we agree with the effects for gross income, even though they're on the bit high side. We have a big disagreement on the expenses, and the disagreement on the cap rate's now only 0.25% from the assessor's recommendation, and we're allowing 0.25% due to its negative factors. We show in the remarks what happened for 2023. That was a board order. They brought it down to 2,528,000, and the assessment now is 41% higher. And the recommendation is still 25% higher than 2023. So once we put in the site-specific repair maintenance and apply a 0.25% premium for the cap rate, we get our value at 2,656,000, and that's my submission. Thank you.
Thank you, Mr. Dupont. Mr. Barakis, do you have questions of the appellant at this point?
No questions, thank you.
Thank you very much. Ms. Linkletter, do you have questions at this point?
Just one question. I'm just wondering, Mr. Dupont, if you had the opportunity to inspect this property.
No, they're not.
Okay, thank you. That's all my questions.
Thank you very much. Ms. Petter, questions?
No questions for me, thank you.
Thank you very much. And Mr. Dupont, again, I think you've touched on it, but when you've made some averages in the expenditures, water, that just seems to jump up at me. And could there be any kind of an explanation why water would dip down to $12,000 in 2023, and then according to your note here, it sounds like it's jumped up to 93,000. Do you have any idea what's going on? Like, that seems rather
Unusual. Yeah. Now, quite often when the water is off like that, it's operating on a cash basis, and water's on the quarterly. So a lot of times when it's erratic like that is that they have only 3 quarters in their financials, and the 1 quarter was put for the next year. So that happens now and then whenever we see something erratic. But then it's actually half of the prior year. So and then it went up really high the next year. It was probably a leak of some kind. Probably something faulty happened, and they had to fix it in 2023, the year thereafter. But nevertheless, I have 4 years indicating that 12,000 is out of line.
And I do see, and I take note of the fact on page 17 with your additional breakdowns here, that for 2021 and 2022 plumbing was fairly significant in both years, with 2022 being very exceptional. Might that have been something to do with the water issues there potentially, or?
Yeah, I think it's
the wrong tree here.
No, it's a good observation. I would agree with that. So that they had to fix something with the water, and it shows in the repair maintenance, which we disallowed. Now the plumbing for the prior years at 3,000, 5,000, that could be on the low side. 16,000 is not that high, but 40,000 surely is higher than normal.
Yeah, and again, forgive me, Mr. Dupont, but when I look at the years that you've provided to us, 18, 19, 20, you look at the plumbing costs there, I mean, they're averaging about $5,000-6,000, it looks like, at most. And then they start jumping up by 10,000, at least from that average, and then another 30,000 over that again.
Yeah, I agree. The 3 years eyeballing it comes about 5,000 average for plumbing.
Okay. And it seems to be a similar story with the remaining R&M, I'm guessing, yes? And I know you made note of some of the replacement costs per suite being rather low earlier in that table, but yet again we seem to have guess, a 1 year anomaly at 37,000 there.
Yeah, that's remaining R&M. So that's not flooring and it's not appliances because those are shown separately.
Okay.
So therefore, it is still very low flooring and appliance. So the 37,000 is not that. So they're not spending it. And it's not, well, counters and cupboards are not shown as a separate category. I guess they could have some of that in that 37,000.
But you do seem to have a line item, counters and cupboards further up that, sir. Is that not correct?
Yeah, and they don't show anything in that, so they could be putting that as part of your remaining RM.
Okay,
I'm not sure.
fair enough. Those are just some observations that I'm making. And I guess at the end of the day, you're making the suggestion that your repairs, overall, expenses are a little bit, further north of what the assessors are, to the tune of, what are we looking at here? About 6% approximately.
Yeah, the expense ratio. Yeah, yeah.
And you're also looking for a 0.25 increase in cap rate based on the verbal recommendation of the department tonight,
That's
correct?
correct. Yes.
And you feel that the cap rate at 5.75 is more, more of a correct position to take with respect to social housing? Is that kind of the idea behind that?
Well, it says a 0.25% extra over our base, so we have the. And what I stated on page 15, there's a few factors. Social housing is one of them. One has no air conditioning. The other one is 50% of parking missing, and it's in a poor location. So there's 4 factors there for the 0.25%.
All right. Mr. Tupon, I appreciate your submission. With that, gentlemen, I give you an opportunity to summarize if you'd like.
I'm okay, thanks.
Thank you very much.
I'm okay also.
Okay, fantastic. That being said, I believe we've heard all items scheduled and this hearing now is adjourned. So gentlemen, thank you very much for your time and patience and appreciate your submissions tonight. Good work overall getting the remainder of the docket taken care of. Thank you.
Okay, thank you.
Thanks.